Hi, I'm Donald McIntyre, Operations Manager at Emerald. In this video, I'm going to do a tutorial of how to organize your account plan using multiple wallets on Emerald. An account plan is a system where you use your financial account to separate your money in categories to organize your finances more effectively. Millions of individuals, households, self-employed, and small businesses worldwide conveniently use this system to manage their money. In this tutorial, we will present 7 examples using multiple Emerald wallets. So you open your Emerald wallet. In the last tutorial, you may remember that I created 5 wallets because we were showing how to create new wallets with the same seed. And now in this tutorial, I am going to explain how this system of creating multiple wallets can be used for your account plan. I'm going to show 7 examples. The first example is a typical sole proprietor account plan. A sole proprietor in any country is a person that just works independently, doesn't have an organized business, but works independently as a person, providing services, products or services to their clients. Because the sole proprietor normally has their money is mixed with their personal money or family money. Usually this kind of account plan is going to be very useful. They can have an account specifically for their business income. They have many clients and they receive all their payments from their clients in this account. And then separately, they may know usually every month how much money they can save, so they can go putting some money, moving some money to a savings wallet, for example. Another category that is very important is the taxes wallet. Sole proprietors have to track their own taxes and go saving or accumulating the money in a different account. So when the tax payment season comes or tax season comes, they have the money to actually pay their taxes. Separately, because a sole proprietor, their personal expenses and business expenses are usually mixed, they may want to have a wallet just to put their money for their monthly expenses for their family or for their for their individual expenses. And also they would like to separate their business expenses. Many of the household expenses can be business expenses, so they can put those the money to pay for those in a different wallet like here, so that those payments specifically are categorized specifically as business expenses because they can be tax deductible when tax season comes. So it's very important. This is a very convenient account plan for a sole proprietor. The next example is a crypto exchanger. That may be a similar case. In many countries of the world, people who have normal businesses, they have another business in parallel where they help their friends, family, and communities to exchange crypto. These are not the big exchanges like Binance and Coinbase and all those. These are small exchangers that work from their offices or other places in their communities, and they provide exchange services to friends, family, and the community. So let's say that in this case is a notary public in a country, and his main business is to be a notary. So he may have a wallet just for his or her notary business income. Separately, because they have this side business as a crypto exchange, they may want to have a wallet where they separate the income of that kind of business only. Of course, in any case, their income is going to be taxable at some point. So to separate part of the money, part of the income they're having for taxes is very important. So they usually have, or they would want to usually have, a tax wallet to go accumulating their taxes. In some countries, depending on the jurisdiction and tax regime, sole proprietors or small businesses have to pay monthly their taxes, sometimes quarterly, and sometimes in tax season at the beginning of the next year. So it's very difficult for small businesses and sole proprietors to go tracking their taxes. Sometimes they even spend the money for the taxes. So it's great to go separating that kind of money in a separate account. Um, and then, because this is a small business, this notary public can also separate part of his or her income in the personal expenses account, and then another one specifically for their office, their employee or employees, the computer expenses, electricity, utilities, etc. The next example, example 3, is a remote worker. Say that this is a remote worker that works in Argentina, Nigeria, Russia, or India, and they have one customer. They work part-time for one customer in Europe and part-time for another customer in North America. No? So they just to organize their income and to keep track of who's paying and who's not paying, they may want to have one wallet to receive payments from remote client number 1 and another wallet from remote client number 2. They could have different regimes. For example, one client can pay them weekly, the other client maybe pays them bi-weekly or monthly. Then another problem that is common that also remote workers have, especially the ones that work internationally, is to keep track of their taxes. So they have a lot of income on a weekly or monthly basis, but they at some point they're going to have to pay taxes, and so they would like to go estimating their taxes and go accumulating that crypto in a separate reserve for taxes wallet. Again, a remote worker also have living expenses and savings like the others, so they're gonna want to go putting some money there as they receive their income and money for long-term savings. So this is a convenient plan that could be used by a remote worker. Example 4 is an advanced dApp user. This is a person who may be very advanced in blockchain and dApp use. But there's so many dApps now, and you can do so many different things for different purposes that it's becoming very convenient to start separating the money that you have for different kinds of dApps. For example, now having all your Ethereum NFTs and crypto and ERC20 tokens and native currency and passive income, everything in one account is very confusing. So Emerald lets you separate everything. You can have a trading account, for example, for trading in Uniswap or PancakeSwap and all those. You can have, if you love Ethereum Classic NFT, there is a boom in Ethereum Classic, then you can go accumulating your NFTs in a separate wallet. So you separate that from your trading account. And then a lot of people just have crypto for the long term, so they may want to have a long-term savings account. In this case, they have Bitcoin in that account. And these advanced users also are already starting to stake, for example, in the Ethereum Beacon chain. So you may want to have a separate wallet to keep track of that specific account, that specific capital that you're staking, and track your income and performance of that specific kind of investment. And finally, there's many dApps that are for passive income. You just send your money and you start receiving income from there. And it's also a different kind of investment. So it may be convenient to have a passive income account. So this is how an advanced dApp user could use an account plan to organize their finances. Example 5 is a charity donations account plan. For example, if you are a social worker in Poland and you receive your donations from friends, family, and communities all around Europe, you may want to organize your finances to make your accounting and managing your money more efficient. So you may want to also have a donations income account that you give everyone to send you donations, and you publish on social media, Instagram, Facebook, etc. So everybody's going to send you money here. And then as you go receiving the money, you may want to go putting part in the treasury of the charity. Usually charities need to reserve some money for longer term investments in a treasury. Another portion of the money, an important portion of the money, goes directly to the beneficiaries of the charity. So in this case, say that it's for the homeless in the local community where the charity is in Poland. So this is the money that they're going to go spending on a daily basis to help the homeless. And then, of course, charities may have an office, may have an employee, utilities, they have to have pay for services or stuff like that, like anybody else. So they may want to move part of the income that they go getting into that account to make sure that they track all their expenses and they go paying for everything. And separately, another thing that is very common also as in families, but also with charities, especially small ones, is that they may want to have an emergency fund. Sometimes the donations fluctuate, they go up and down, and they may have a few months where they have very little money, new donations. So this emergency fund is to cover for that lost income. The next example is example 6, business who hires remote account plan. So this is just as we showed the example of the software engineer or developer who works for a client in Europe and another one in North America. This is the case of, say, the European company or the North American company, and they are hiring many developers. Not only that developer, but they hire developers in Argentina, Brazil, Nigeria, India, Russia, and other places. So they say that they have 30 developers. So the account plan of this business would be, on one side, all the income of the business. And from that income, they're going to separate the money that they need to pay on a monthly basis to all their remote workers. And through Emerald, you're going to be able to pay to all your remote workers at the same time in one transaction. In the future, this is in the pipeline. It's going to be very convenient. But for now, you can separate your money and conveniently track your payments to your remote workers in other countries. Of course, you can also go putting some money for your working capital, for your local operations, and then monthly expenses. And like any business, you need to go accumulating your reserves, especially small businesses, your reserves for future taxes. So you go estimating your taxes with your accountant. In the future, you're going to be able to share your information privately with your associate professionals, like your accountant and lawyers. So the accountant is going to have access to this information to go tracking your taxes, and is going to tell you how much money to accumulate for future taxes. The final example, example 7, is a miner, say in Central Asia, who mines with GPUs and ASICs. This is an advanced miner. He has an operation maybe at home, or maybe they have a little data center with their GPUs and ASICs. And they want to track the income of the different types of mining. So they have a GPU mining income account or wallet inside Emerald, where they're going to go getting all their payments from, for example, Ethereum, Monero, Ethereum Classic, Ravencoin, etc., wherever they do GPU mining. And then ASIC mining, say Bitcoin, and they can go receiving their payments from the mining pool in a separate wallet inside Emerald, the ASIC mining income. And of course, between 50 and 60% of miner revenue is usually goes to pay for electricity, between 50 or 60%. So maybe they want to move 50 or 60% of this income here from these two accounts into a mining electricity bill, which is their local electricity costs. In the same way that they have to calculate the electricity cost and reserve money for that, they also, like anybody else, have to reserve money for their taxes. So they would do that in a special tax reserve account within, or wallet within Emerald. And finally, many miners, they actually accumulate their surplus, their earnings, because that's why they mine, to make money. Sometimes in fiat money, local money, but many miners accumulate it actually in crypto, because they are also betting for future growth of the coins that they mine. So they could have their surplus account separated, just to separate them from the rest of the wallets. So this was our tutorial of how to organize your account plan using multiple wallets on Emerald. Thank you very much.